All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about a Bitcoin miner that is by far my most requested video. So I'm going to do a video update on them, and it's Marathon Digital Holdings, stock ticker MARA. I will tell you, this is a stock that people either seem to love or hate. So I want to go through what's actually going on with them. We talk about Bitcoin and Bitcoin miners all the time on this channel. If you are new or if you have not yet subscribed, please subscribe to the channel and hit the notification bell. Also, if you could smash the like button, it helps the channel out a lot. Lastly, you can join the channel and become a member by hitting the join button on the YouTube page. It's right next to the subscribe button. Members get some members only content. We do a live stream once a week, and that will be actually today, Tuesday, after the market closes. And in addition to that, the members get to pick a video on the live stream for me to do a deep dive on. So we'd love to have you join us there. Let's talk about Marathon Digital Holding. I will tell you, I get more comments on this stock than any other stock, and people seem to be more passionate in both directions on this stock. So there's a lot of people that love this stock and their mind is made up, and there seems to be a lot of people that despise this stock and their mind is made up. So I also get a lot of people who think that I hate this stock, and then there's a group of people that think that I love this stock. So I will tell you, it's neither one of those, and I try to make this clear in all my videos. I remain up in the air. Marathon, to me, is a company that has a massive amount of potential. They have not realized that potential. The risk has also changed by taking on some new debt over the last few months. So I'm going to try to just give you the information so you guys can decide on your own. I know a lot of you have already made up your mind, but I think it's worth listening to and understanding the risk assessment. So if we look at Marathon right now, they're trading at $3.39.88. This is actually their 2-year low. So right now, as we speak, we're in the middle of the trading day, so we'll see where it ends up. So they are now a $396 million market cap company. Just very quickly, I always like to show, this is a chart of their market cap over the last few years. So at their peak, which was over a year ago now, it was about 13 months ago, this was a $7.5 billion company. So again, they're now down to $396 million, call it $400 million. So you can see this is down much, much more than 90%. I'd like to show the reduction in market cap to keep it more clear. This company has legitimately gone down. This is not just because they've issued a massive amount of shares of stock. So again, almost all the Bitcoin miners are somewhere in a similar picture here, somewhere at or near their 2-year low. So Marathon is not immune, and they're no different. Okay, so quickly, a couple of things. The first thing I want to address is their debt, because Marathon has some of the best debt in the world, but recently they've taken on some debt that's a little bit tougher. So I want to go through that, and they've also collateralized their Bitcoin. So this is something I think they're trying to undo, and this is one of the important wild cards. I'm very neutral on this stock. I do think that there's a chance they could end up being the big winner out of all these companies. However, they have taken on a lot of risk, and they've also underperformed operationally. And I mean, that's just a fact. We'll take a look at what they said they were going to do versus what they've actually done. Now, if they catch all the way up a year from now, and they're at 23.3 exahash, I don't think anybody's going to care at that point that it took them longer to get where they're going. But for now, we're in the middle, and they're only at, last reported, 7 exahash. So they still need to add about 16 exahash to get where they said they were going to be in early 2023. So obviously, it's the end of December 2022 right now. So they have a long way to go to get where they were talking about. As of their September 30th financial statements, I want to take a look at what their debt was, and then there's a footnote of subsequent events. They added more debt after this, and then we'll walk through what they've done with their debt, because a part of what they've done is collateralized their Bitcoin, and at a point this looked like it was going to spiral out of control. I think that they may have turned the corner and they're headed in the right direction on this now, but I just want to walk you through what this is, because this is a major factor. So you're going to see this is their balance sheet as of September 30th. If I go to the liabilities, you'll see under long-term liabilities, they have convertible notes of $731 million. So that is a massive amount of debt. A lot of people look at that and are scared by that amount of debt. I will tell you, I've been pretty consistent in talking about how I think that is actually excellent debt. They got that at the right time. They structured it properly. Those are convertible notes. There is no principal due until 2026, and they pay 1% interest on that. So yes, that is a huge amount of debt, but you couldn't ask for a better debt structure than that. So to that extent, you know, this gives them until 2026. That's years after the halving to get to where they're going. So that part of their debt doesn't worry me. Obviously, you do have to take it into account. It's two other things. They have a term note here for almost $50 million. And in addition to that, if you go to footnote 13, subsequent events, you'll see during October of 2022, so that's after these financial statements, the company borrowed an additional $50 million under the RLOC. So they had $49 million outstanding. They borrowed another $50 million. That's $99 million of new debt that is not their 1% debt. And in addition to that, this $99 million in debt is collateralized by their Bitcoin. So this was spiraling to a point where the price of Bitcoin was getting low enough and their debt was large enough that it was getting ready to encumber all of their Bitcoin. It got to the point where they had 1,950 Bitcoin left unencumbered by this loan. So, out of over 11,000 Bitcoin, this loan was collateralized by the majority of that stack. So that was starting to be concerning to me. However, fast forward to December 6th, and they put out this press release. This was with their December monthly operational report for the month of November. Management's commentary. We took proactive measures to reduce our revolver borrowings from $50 million as of November 9th to $30 million as of November 30th. So you can see they paid off $20 million of this debt. And as a result, they say the combination of this debt repayment and our monthly production increased our unrestricted Bitcoin holdings from 1,950. So that was getting very close on November 9th to 4,200 on November 30th. So they're starting to clear some of that up. If they can clear the rest of this up over time, obviously that's the first thing I'm looking for, even more so than production. Right now, we are deep into a crypto winter or bear market or whatever you want to call it, but Bitcoin is trading plus or minus around $16,800 for about 5 or 6 days now. So at these Bitcoin prices, I'm not as worried about production as I am about managing debt and liquidity. So I think they've done the right thing by reducing this. Now, I've heard a lot of talk that they've reduced this a lot more, but if you have information that supersedes this, please leave it in the comments. But please don't just say they reduced their debt. I'd like to find a source of the information that's a reliable source, because I've looked at their press releases, I've looked at their SEC filings, I've looked at their Twitter page. I've basically done a full deep dive on this. And this seems to be the latest and greatest information, is that they've paid this from $50 million down to $30 million. So if somebody has more updated information, please reference exactly what it is in the comments, because that would be useful to know that they've paid this down more. But to my knowledge, this is all I can find. And you'll see they did put out another update December 19th, and they still talked about these same exact numbers. Okay, now I want to just go back in time to August 2022. So if I go down into here, you'll see they have a statement that says the company continues to expect to have enough miners installed to generate approximately 23 exahash near the middle of fiscal year 2023. So that was just a few months ago in September that they were reporting that. And again, as of right now, they're at 7 exahash. They did say there was the possibility they could get to 9 exahash by December 31st, but looking at their daily production, it doesn't look like that has happened. But either way, even if they have the machine set up for 9 exahash, that's still another 14 exahash to get to 23.3 exahash. So they were saying at the beginning of 2023, then they started to say the middle of 2023. Now they're kind of not committing at all. So this is a part of my concern with Marathon. They have definitely underperformed versus what they say they're going to do. And the big reason for that is they have a lot of business partners. They took what they called an asset-light approach. They did not build all their own infrastructure, so they have partners for everything. So they rely on those partners from a timetable standpoint, and a lot of those partners, almost all of them, have disappointed and have not met their part of the timetable. So as a result, Marathon has been slower in getting their exahash up and running than they expected by quite a bit. So that remains my concern. If and when they get to 23 exahash, that will be a different story. But for now, they're somewhere between 7 and 9 exahash at the end of the year 2022. So if we look at this chart they put out earlier in the year, they said by the middle of the year 2022, this is a little bit hard to read, but you can see by the middle of 2022, they were expecting to be at 13.3 exahash. Well, it's now the end of 2022. And they're somewhere between 7 and 9 exahash. So they fell well short of that goal. And then you'll see 23.3 exahash in early 2023. So that is not happening. They're not anywhere close to that. So that is something that concerns me. And if we go back to their balance sheet, you'll see advances to vendors, $687 million. So until all of those advances to vendors turned into machines that are plugged in, energized, and running, I would still count that as risk associated with this company. So this is a big risk, big reward company in my opinion. So this all depends to me on what your risk tolerance is, what your faith in management is, This is what I look at when I do my due diligence. So to me, that's a giant risk. But on the flip side is a potential giant reward. If they can get everything set up the way they said, they're going to be at 23 exahash. They will be the biggest Bitcoin miner at that point if they're able to do that. And I know there's some other Bitcoin miners that have talked about ramping up as well. So there's 2 or 3 that are trying to give them competition. But my guess is if they get to 23 exahash in 2023, they will be the biggest publicly traded Bitcoin mining company in North America, probably by far. Okay, so this is a chart of the Bitcoin that they've mined by month for the last year plus. So you're going to see over a year ago, in October of 2021, they were mining 418 Bitcoin a month. Well, in the month of November 2022, so that's the most recent month that they've reported, they mined 472 Bitcoin. That's hardly any improvement over the course of the year. Like I said, they've spent over $1 billion and their exahash rate has gone up drastically. But you can see they got all the way down to a point in July where they mined only 72 Bitcoin in that month. So this company went through a lot of transitions. They closed down their old facilities. They moved everything to new facilities in Texas. So they did bottom out in July, and you'll see their production started to go up from there. It looks like they're participating in self-curtailment because they peaked in October at 615 Bitcoin mined, and that was a number that was about appropriate for the amount of exahash that they had. In November, that went down to 472. So they are on pace actually to do less in December than they did in November. They did 472 in November. It looks like maybe they're on pace for 440 or 450, but we'll have to wait and see. They still have some days. They could have high production, but I would be shocked if this was 500 or more from where they're standing right now. It's going to be very hard for them to even match last month's total of 472. Again, I think this is due to their self-curtailing, and I think it's because their energy costs are high right now. It is very difficult to determine their cost per coin. If I do the straight math per their financial statements, they're paying about $22,000 per coin, and that does not include depreciation. So that's their cash cost per coin. However, I think that that is misleading because they do a lot of curtailing and because they have a lot more infrastructure than they're currently using. I think that number is out of whack. I do expect that number to go down over time and become more competitive with the other Bitcoin miners. So I'm not judging that as their final cost per Bitcoin. I do think they will move in the right direction, but again, only time will tell. We have to wait and see. Okay, so then quickly, I'm just going to end on the chart here. So if we look at their chart, this is basically the last 4 or 5 months. So they peaked here in August, as did all the Bitcoin miners. So from their peak in August, and that's when Bitcoin had run up to $25,000, they're currently down about 82% just from August of this year. So you can see this has gotten beat up pretty good. They took out their lows from the summer. So all the Bitcoin miners hit a low back in June or July of 2022. Marathon got down to $5.20. That was their low. You can see they took that out early in December of this year, and they've been going down ever since. So they're now down 34% off of their previous lows from this summer. So like most of the Bitcoin mining stocks, this stock is trading way, way down off of its highs, even its recent highs. Just in the last 2 months, this is down about 78.5%. So this has been a tough couple of months for Marathon. It's been a tough couple of months for Bitcoin. It's been a tough couple of months for all the Bitcoin miners. But for me, you can see Marathon at $3 and change. It really just depends on your own risk tolerance. So I'm not in this stock, but I have been in the past. Obviously, this is not financial advice. I can't tell you to buy or sell this stock. You guys need to make that decision on your own. And I stress that in every video. And also I stress the Bitcoin miners are particularly volatile. So be careful trading these stocks. Know your own risk tolerance because that's what it's all about. So I don't really think there's an answer to, is Marathon a good stock or a bad stock? I think Marathon has a risk-reward equation that if you understand that risk-reward equation and you know your own risk tolerance, you can make a buying decision on this stock. So those are my thoughts on Marathon. Hopefully this helps clear things up a little bit and presents some of the information for you guys to do your own due diligence. So let me know in the comments below. Thanks so much for watching, and remember to subscribe to the channel and smash the like button. Also, if you hit the join button, you can join us today on our members only live stream after the market closes. Thanks again for watching, and we'll see you in the next video.